Hey everyone, this is Andy from the Finding Value Finance channel. I've got Scott with me. He's ripping it over there in the sow and reap capital land. So definitely sign up to his channel if you guys like his content or like his opinion. We are going to talk about natural gas. Natural gas is at an inflection point right now on the charts. A lot of people are pondering, what would I do in this scenario? Should we buy more? Should we sell? Should we wait for pullback? And the short-term movements, honestly, guys, are unknown. That's what most people are going to find out if you've been investing for a long time. Short-term movements are the least reliable, and sometimes you get things wrong in the short term because technical analysis is the least accurate in the short term, and maybe you'll get 60% right at the time, 40% you're wrong. The question that you have to ask yourself is, how do you want to position and how do you want to buy and sell in these types of markets? That's really the question. Some people, they try timing these things, but as Scott says, what if it goes boom on you and you're not in it? You don't want it to go boom when you're not in it. So Scott, what kind of setup do we have in natural gas? What's going on with the chart and what are you seeing?
Yeah, so we've got a lovely looking bullish accumulation cylinder. So Jesse Livermore cylinder. So we're in an inflection point here in that we're just sitting right at resistance. So I think there are a couple of scenarios here, right? Either like this is anyone's guess. Like no one knows what's going to happen to this because any big trader that steps in, pushes it above this, it could just go boom, right? Or another thing that it can do is pull all the way back and then go boom. But here's the kicker. Let's say, and this is why we sit tight, right, Andy? So this scenario is possible, but let's say this scenario, let's say it starts dropping, right? Let's just draw this in. Let's say it starts dropping here like that. What do you do? Like, do you wait for a further pullback until here? I don't know, maybe, but one thing that can happen also is it could just come down to the next level of support here, which is around here, and then go boom. So in the short term, like it's so unpredictable. And like just because you have this movement right, it doesn't mean you're right. It means you've just fluked it because as Andy was saying, like charts only tell you, maybe give you a bit more, I guess, favorable entry points or exit points. But for me, it doesn't really give you the path. It doesn't really give you the path with a great amount of accuracy. You can look for these key support areas. So one thing that I could potentially do if I was a natural gas bull is probably wouldn't chase it here. Like if I was looking to buy a new position into natural gas, what I would probably do is look for accumulation points. So this is probably the first entry point that I'd be looking at to see if it comes down, does a little basing pattern. I'll probably get in then. Another entry point could be to save my cash and then wait for a pullback here. But will I sell any existing positions? No way, right? Because my goal is to accumulate as much as I can over time. It's not to sell any of the positions now. Because what happens after that? What it can do is, if you just measure natural gas in gold, and let's say it absolutely breaks out of this thing, you can expect to see something like this. This is Livermore's bullish cylinder. What you can expect to see is maybe something like this happen, right? Which aligns with the fundamentals that we're talking about. So maybe we'll do something like this. And what is that in terms of gains?
And the reason you drew it like that is because the symmetry on the other side.
Yep.
Just
so let's just say, yep, that's right. So you've got potentially a huge inverse head and shoulder.
Yep.
Potentially. Like we don't know the path that it's going to take, but potentially. But here's the thing. So you are risking losing out 650% in natural gas prices, which means the natural gas stocks will probably outperform by by multiple factors. You're risking losing, like in your natural gas stocks, for example, 20x, 50x by trying to catch, how much was that little fall there? By trying to catch potentially what could be a Let's draw it down to here, a 20% fall. Or if it went all the way down here to the bottom of the channel here, 37% fall. So for me, in terms of risk reward, it just doesn't make any sense to trade in and out of this because you didn't accumulate. Let's get real, right, Andy? You didn't accumulate all the way through here to catch a, what is it? Like 100% move commodities. Like we're not in this for 100% moving commodities. We're in this for like multiple, like 10x, 20x, 50x. So to lose your position here just because you're expecting a fall down to even this level, like that doesn't make sense to me. So that's why I always say, I don't care what it does in the short term. All I care about is I hold on to my positions and look for accumulation points because the big fundamental thesis is there. And when I say I don't question the thesis, it means I don't question the fundamentals, the demand and supply deficit that exists and will exist unless something dramatic happens, right? So that's what I talk about. And Andy, I think you had a bunch of stuff around natural gas that you can show as well in terms of the fundamentals. I don't know if you want to show that.
Yeah, so I already showed that in a different clip, but I can talk about some of this stuff and why I would not like my decisions here. So when you're looking at something, it's about positioning for the trend. So when you position for the trend, and it's like natural gas, oil, I positioned at a very good time. It was 2020. Now here's a couple of things that you have to think about. If you're going to position something and sell it, that means that you're going to have to pay taxes on it. So if you're in there for a long-term capital gains tax, you're going to have to pay 15% into taxes. That means that that stock's going to have to pull back greater than that amount. So at least in my country, in other countries, it may be different. So what's the likelihood of losing the position and actually going down within, greater than 15% and being right on your timing? It's too complicated. Why would you lose your position if the upside is massive? Why would you be selling something for a short-term movement if we're positioning for an energy crisis? So even if someone said a recession's coming in stocks, but I see no indication of the commodities turning around, the commodity, the CRB to S&P 500 ratio, if that's still positive and moving higher, if your drivers of the liquidity in the system, the real estate market are still driving, why would I chance it? What do I gain? I mean, you've got a massive upside potential, small downside. That is not an asymmetric bet. That's an opposite. That's called, and I'm going to try to be polite here. It's just stupid. It's really stupid. So, and the reason I say that is people are worried about the short-term movements, and then they have confirmation bias by the short-term movement. So when they say, I may make a general statement, or maybe someone makes a general statement like inflation will remain elevated, it will remain high. And then someone will take like a small little movement in one piece of data over one quarter or something and say like it went down a little bit. And they're like, oh, this is wrong. The thesis is totally, screwed up, or the short-term direction is not known. And I should sell because the recession is going to come. They worry about one data point. And the way that I'm telling you is, I am here for the big trend. And as long as the big information data is still intact, I'm going for it. There is no point to lose the position this early in the game, and the game hasn't even really started. I mean, that's literally like you're going to go play a baseball game. You're down 1 run in the first inning, and you're like, it's done for. We lost. And you're like, we just started this game. What are you talking about? And everyone's packing up. The whole team quit. We forfeited the first game. We didn't get the first out. The guy got on first. We quit. We're done. And that's what all these investors are doing. They look at data and they're like, they look at one random thing that may not even mean anything. And then they say, we're done. So, I look at that chart and yeah, we could pull back. That is a possibility. And that's why my strategy that I developed in 2020 before the bull market was buy big when it's cheap and the ratios look good and the technical charts are there. When we start going up, I buy the dips and hold the rips. That's my strategy. To get out of this, no way. I did it last time, screwed me up. You want to miss out on a 100 bagger? Be my guest. I'm not missing out on 100 baggers, guys. I don't care about a 30, 40, 50% correction. It doesn't mean that I'm wrong to hold through it. Because everyone else, oh, well, why would you hold through that? If it's clearly obvious going down, well, if it's that clear, if everything is that clear to you, my question back to you would be, why are you on Twitter? You should be a billionaire doing whatever you want if everything is that clear. But it's not that clear, in my opinion. I mean, you could have educated guesses, you can have statistical probabilities, but why risk the probability if the rewards are so great to the upside? Why risk a 20% improvement on your position if you've got hundreds of percents upside gain? I just don't see the, maybe I'm just wrong. Maybe all those people who trade in and out are right, and they just never successfully put it all together, because I don't see too many billionaires doing that. So I don't know. I'm playing the big trend. I think that the possibility to go higher directly is there. I don't know if it will happen though.
Yep.
So,
and I'll show you the difficulty of trading, because when I first started trading in 2000s, I looked for these channels to form. And before I get into this, actually, I'll show you this. And I posted a couple of these, but I'm noticing this across the uranium sectors like this, and funnily in Betterment as well.
yeah, they're peak like cycles on a duration basis. Yep.
On a duration basis, yes, exactly. Which I thought was pretty interesting. So you get nice, nice cycles, time cycles in the uranium sector. But anyway, let me get back to my point around trading in and out, because this is exactly what I did back in the 2000s. I looked for the parallel channel, or there's some sort of channels to form, and I started buying low, selling high. And here's the difficulty with this. Let's just take everything off this screen. Let's just say you've started here and you look, okay, let's say you need to wait, first of all. You can't just be trading without any kind of channel to form. So you're waiting, right? So let's say you're here, you've drawn this downtrend line, and you're waiting for a pullback down to this level, right? Because now you're expecting a fall to this level. Technically, that's what should happen based on this chart, right? Because you're in an uptrend, it should come down to the bottom of the downtrend. It didn't. Like, you would have missed out. You would have FOMO'd in here. You're like, oh my goodness, it's going off. And another difficulty is you draw an uptrend here and you go, oh, it's a breakout. I need to buy because it's just going to take off, right? Rocket off. It doesn't work. It doesn't work. Sometimes it works. I mean, there are sometimes beautiful channels which touch exactly at the bottom and exactly at the top, which I managed to find a couple in 2000s. Which is why I managed to catch so many of the 30%, 50% moves. But one day, right, this is just gonna blast off. Like, I'm not, and here everyone's fearful now. But if you follow that technical analysis of buying within the trend, bounces in the trend, this is the buy spot. This is the area where you should be panicking either. So this should be a buy. And then the thing with this is one day it's just gonna take off. Like, it's not, it doesn't care about this channel anymore, right? Like it did in Rio Tinto back in the 2000s. So if you look at this beautiful channel here, you've had a couple of false breakdowns, and you would have gone, oh, let's sell, sell, sell. That would have been very much a losing trade. But what I mean by it's not going to look back one day is one day, right? We don't know exactly when. It could be next month. It could be a couple of months down the road. It could be 6 months down. Who knows, right? It could be a year down. I don't know. I don't think it will be a year down, but it could be. But one day it's just going to blast off and never look back, right? This is what we're waiting for. This is the run that we're in this game for. Like, we're not in this to catch little tiny moves here and there. Like, we're not here to catch, oh, a fall. Because if you look at this is a weekly chart. Let's just turn back into a monthly chart and to see how long it typically takes. Like, you could be wrong 1, 2, 3, 4, 5, 6, 7, 8, 9 months here. And everyone will be calling you, oh, you're wrong. Rio Tinto's going down. It's broken down the trend line. But that's not a long enough time frame to determine whether your call was right. Because in the commodities bull market, it's a 10-year cycle normally. When commodities boom starts, it normally lasts 10 years. Obviously, we do expect to see a deflationary pressure in the middle somewhere like we did in the 1970s and the 2000s. But if you're talking a couple of weeks, a couple of days, that's nowhere near enough to call whether something was right. Because we are, just remember, I mean, there might be traders out there, good luck to them, but we're not, Andy and I are in this to catch a move that looks like this. We're not in it to catch little moves, right? So I think people need to understand that. And yeah, I don't know.
I mean, another point though is when I at the beginning of this market, I got a very good buy point. All right. So let's say I end up with a 50 or 100 bagger in one of my positions. How many 40% impulse moves do you have to get to equal what I just did? It's probably a lifetime of trading. So I'm doing in a 5-year time frame or a 8-year time frame what traders do in their entire life. I mean, think about that for a second too. And what risks are they taking and how profitable are these short-term traders? They're not. They're not. That's why I developed this strategy, why I saw the bull markets and why I'm investing for the long-term trends. I mean, that's literally why I did all of it. That's the whole point of the channel and the website, really. I mean, the short-term stuff is just not, it's like a waste of stress and a waste of like time. I mean, you can make some money, but even if you're like taking it at 100% at a time, it's just, the markets don't hit your points as frequent as you want them to be. They're not as exact as you want them to be. They're not as reliable and as frequent. Like it just doesn't work the way that people are set up emotionally and whatnot. So you're going to be thrown around. You're going to be chasing stuff. You're going to be selling at wrong times, buying at wrong times. And if you're not ultra emotionally stable and controlled, if you don't set up these rules, and if you don't follow the rules precisely, exactly, I mean, it's just going to tear you up. You're going to end up on the wrong side too many times, and you're going to be losing money when you look back at the market when it just did a 50 bagger in your face. And then you're going to want to, you know, go back in time and try to relive it, but you can't go back in time.
Yep.
So the easiest thing to do is hold.
That's right. That's right. And that's what Jesse Livermore was saying, right? Because he was a very frequent trader, right? At the beginning of his very career, he was a bucket boy, which, you know, obviously don't exist anymore. But I think it's like when you just go, you know, bet on the price movements, and then he became a short-term trader. He was, you know, trading in and out, and then he came across this guy, an old man, who said, "We're in a bull market, you know. I'm not losing my position." And then it clicked. It's like, I've seen so many people that managed to pick the bottoms and managed to pick the tops when it should have given them the greatest amount of profit, but never seen them rich, never seen them make money. And he realized, bang, if you're in a bull market, you just ride it all the way along. And that's what Jesse Livermore, after so many years of successfully actually trading short term, he said, no, I'm not doing that anymore. I'm gonna be in it for the long haul. I'm gonna ride through this. I'm gonna sit tight. So, and that's exactly the lessons that we've learned, right, Andy? Through the 2000s commodity boom is, I did it. I was there. I was trading in and out, thought I was a genius until boom, one day it broke out of the channel. Like, no one's smart enough to pinpoint at which point it will break out of those channels, right? And so the only thing that I can do now is just sit tight and wait for the breakout, wait for it to go parabolic, and then I'll think about exit. Maybe like, you know, a year from when it starts breaking out. But to be thinking about exit now is just nonsensical to me. I'm not in this for 100% gain. I'm in this for 100 bagger.
If we can get it. I've never had 100 bag. I'm hoping that this commodity bull market will give me one. I've never had one. I've had, you know, 10, 20, 30 baggers. I have not had 100 bagger. I've never hit the triple digit amount. Some people have hit the 4. They've hit 1,000 bagger, and that is, I don't know how you hold through that. That's ridiculous.
Yeah,
because you're now playing with, like, I mean, if you had a $10,000 position and you're up like 100 times your money, so 10,000 to 100,000 to $1 million, you're now playing with $1 million from 10 grand, and you're still riding this thing. And each day it's like going up and down far greater than $10,000. I mean, you're just riding this bull and you're like, I'm going for 1,000x. But I mean, 1,000x. I mean, that's another zero. That's 10 million bucks from 10 grand. That would be a heck of a ride. I mean, if I could ride one like that, that would be like my biggest accomplishment ever. if I could
Yeah.
hit something like that. But I don't know. That's incredibly hard. You have to be incredibly early at a incredibly good price. And the one thing I'll say is the biggest thing that you want to do is you need to pile in when things are really low. You have to, you have to really be like basically connected to a thesis sort of strategy that you know that this thing is coming. And you got to get somewhat lucky and get a really good entry point. The entry point is everything because, there's a huge difference between getting in at $3 versus $1 in terms of your multiples. Huge difference. So if something's bouncing around and the sector looks good, and it kind of, you just get it like a pullback, like a deleveraging type of event, and it pulls back 30-40%. I mean, it goes back to $1.50 from $3 or something like that. That's your opportunity. You have to get some money in there if you want to try to get a very large multiple. You have to be in when everyone else is like, you're crazy for entering this. And that's just the way it is. And that's when your portfolio position sizing, dollar cost average, all that stuff comes into play. Because when it comes in, it's like boom, 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 hit some in there. And then you look somewhere else, hit some in that when it's down. And you're going to have to do opposite everyone else because your body's going to tell you, not mine anymore, but other people's bodies, they're going to tell you like, don't buy it. It's going down. It's scary. Oh my goodness, I should sell. That's the exact time you should be loading up.
It's like flight instinct, right? So you wanna be, fleeing the scene when there's blood on the streets.
Well, here's the thing on this last pullback. I was actually getting aggressive when I should have. It was insane. It was like my instinct just kicks in like, this ain't going any lower. And I just load up because I'm looking across the whole sector. And I think we're going to go higher here. I mean, that's me in some of these sectors.
See that I see that as development from like a herbivore, right? Like a deer or something to carnivore, like cheetah. You're seeing the opportunity and you're jumping at it. Whereas like the rest, the herd, like sheep or whatever, they flee the scene.
They get scared when I'm getting hungry. And that's true because I guess the cheetah needs to go eat some sheep or something.
Yep, that's right. So that's why I jumped on like Centris Energy, because I've seen the decline. Like I've seen like, well, how much did it decline by? 80% or something. So that was my first
78.6 or something. It's the Fibonacci retracement level.
So that was my first ever entry into Centris. Not a recommendation to buy, not financial advice. Because they do have risk. Like with Centris Energy, they do have risk with Russia and stuff like that. So I'm taking on that risk because I'm thinking it's a risk. There is risk there, right? So don't want anyone to just jump on it just because I bought it. I'm taking on that additional risk here because of the Russia thing, because they do source quite a lot of stuff from Russia. I'm taking that risk, but.
Well, why are you choosing Centris? What draws you to it in the first place?
It fell 80%.
Well, it's not just that.
I think
the size of the moves are ridiculous.
Size of the moves, the fractals. So this, I mean, just to get back to its previous high from where I bought it at 21. Just to get back to, let's say 21, around here. Yeah, just to get back to its previous high, I'd be making 317% from where I bought it. So it's the fractal, it's the move, and that's why right now I'm mostly in these names where just to get back to its previous highs, like it needs to do 200% or 300%. So for me, this is a low risk entry point, and that's one. Another thing is obviously the enrichment stuff, because they've been developing helio, which is high what is it? I forgot. High SA, low enrichment uranium. Yeah. So yeah, they've been developing that with DOE, Department of Energy, and so I think when we can't rely, when the US can't rely on Russia anymore, DOE will have to fund them. Is what I'm thinking, right? But it might not eventuate. It might not happen, right? But I think there is a pretty good chance that DOE will need to, get Centrus to develop some kind of like enriched uranium. So, it's a bet. It's a risk that I'm willing to take for the return. And remember, this is probably like maybe 1 or 2% of my total portfolio anyway. So I think position sizing, like you said, I don't need a huge position in this, because if this thing turns out to be right, like we're looking at insane gains, right? That's why I need like 1 or 2% in this. I don't need any more than that. So, this is a log chart that's been drawn up beautifully. And I think we talked about how when things start going parabolic, it normally trades within the log chart pattern. So if this thing was to say hit, I don't know, like its highs and hit the peak of this, hit the upper channel of this log chart, let's say late next year, let's say December next year, just purely looking at the chart, not looking at the fundamentals of the company, I'm just telling you what could happen. Let's just ignore the name altogether and let's just focus on the chart, right? Let's say this is not even Centrus Energy. But what I'm saying is, if it does this, if it does hit the upper channel by end of 2023, we could be looking at $954.
Yeah.
That's what chart is telling me. It's not the fundamentals or anything. This is what the chart is telling me could happen, right? And it could be a low chance, but I'm willing to risk 1 to 2% of my total portfolio in a low chance, very high risk, but also very high reward play. But it's like this with all the charts. This is the craziest thing, Andy. Like, it's looking like this across so many different charts that log charts have started working beautifully across many uranium names. Let's just delete everything here.
So this is elevate.
This is elevate.
Mhm.
Like, it's just going right up. Oh, yeah. Look at that. That's looking really good as well.
Yep.
In terms of just sticking with its log chart and the channel, like it's hit it here, hit it here, hit it here, hit it here. And yeah, I mean, my base case is that it will hit the upper channel again at some stage.
No, and it's way up there compared to where we're at today. And what if it jumps out of that channel to the upside and runs for a little bit? I mean, you could see a big move.
Yeah. But it's like this with, most uranium charts, most uranium names that I'm in, right? Let's look at Betterment, for example. Like that's a beautiful channel going up as well. Look at that. So I'm seeing this across a lot of the names, a lot of the names, which is why I'm not getting out of anything, right? Because I'm just not. I'm looking at this chart, drooling over there. I'm like, I can't get out of these, because one day, I mean, just to get back to the upper channel, for example, here with Betterment, that's 521% if it was to go there by July. So it needs to do a 500% return if it was to go to the upper channel by end of July. But what happens is, if you delay that a little bit further and just go, how about if it was to hit the upper channel by
What about in September? What about September?
Yep.
Because that's where the peak, yes, where the peak is kind of almost.
Yep.
Like right in there somewhere.
So if it was to hit the upper channel by September, it's 732%. And this is why I don't mind things taking time, because I know the rewards will be greater if everything takes time. That's what the chart is telling me, right? So if it was to get there by July, it's 521%. If it was September, it's 732%. If it's December, it's 1,200%, 1,300%. So that's why, that's why I'm in it.
What about the mark on June of 23 or something?
June of 23?
Yeah. Or I mean, see, what's ridiculous is this is your entry point, and if you just hold on, I mean, how are you going to beat that? How are you going to beat that?
Yeah, 2,200
from where we are today.
Yeah.
What if your entry point's where I got in at 2 cents at the bottom in November, October of 2020? It was 2.5 cents or something a share. And then what does it end up going up to? Like some ridiculous amount of
There you go.
a lot of
Well, that coincides with the previous high as well, Andy, right?
I
That
know.
time frame next June. Like, we could be there. Like, I mean, this is a thing. Like, I don't know if you want to focus on the short term, because I don't think anything will beat the sit tight strategy. And I've asked a couple of people on Twitter, like on public tweets, saying, you know, okay, let's try this out. Let's just say we sit tight from now on, and you give me your trades, I'll follow your trades. Let's see which one comes with greater return. And like, no one's willing to take on that challenge. No one's come back and said, yeah, let's do it, because I don't think you can beat it. Like, I think people that pretend to know that day trading in and out of these things can make more return know that it's not going to beat the sit tight strategy. Like, what happens if it suddenly starts doing this?
Well, I know.
Like,
There's no way you're going to beat that. There's no
how,
way you can trade and beat that. You'd have to take on so much leverage somehow to beat it.
yeah. Yeah, and you're going to get so many trades wrong as well when it's this volatile.
Yeah, yeah. I mean, this is literally just sit there and be someone staring at a screen. You don't even have to do anything. And what they're going to be doing is making like 1,000 decisions. It's
I know.
too hard.
know.
And there's too many that you'll make wrong.
Because like if on log chart, even it doesn't nothing's there. You can't trade this on log chart. There's no channel. It's just like parabolic move on even on log chart. So yeah.
Yeah, it's coming. And that first fractal is a big one. So
Yeah,
we'll see what happens.
And here's the thing, right? Here's the thing. Let's put a really bearish case to this. Let's say this is the double bottom, and then we come all the way down to retest this neckline here.
Mhm.
It could
Which
happen.
is possible.
Which is
possible, yeah.
possible. I'm not saying it's likely, but it's possible. But
Mhm.
like that, okay, well, let's say that's more than like 60-70% drawdown. But to me, I don't care, because my ultimate return is somewhere here, or maybe even greater than that, right? So I'm just like, I don't care about this. This is how I look at it. Like, you know how like the hardcore gold stackers, that it's not about the dollar value, it's about the ounces. Like, to me, I feel this exactly the same way with uranium plays. I don't care about the dollar value right now. It's all about how many shares in this company. That's all I care about. I'm in it for the big run.
So the thing that I do is I just, if something pulls back like that, I just buy a bunch more and,
Yeah.
and cost average into it. And then now you've got a way lower cost basis.
Yeah, yeah,
Well, it'd be higher for me because I bought a long time ago, but
yeah.
I'm not trying to, it would be higher. It's like I'd be averaging up, but I do average up into companies, and I did average up
Yeah.
in Betterment multiple times in different accounts to get it access and or exposure for that particular account. My original values were all in a Roth IRA, but I also wanted it out of a Roth IRA. So if it goes some ridiculous amount, I could retire early. So I got in at like 4 or 5 cents because I didn't have that amount of money at that time. It's just the way it worked out. But if it came back to 7 cents, I'd buy more. I'd buy a lot
Yeah.
more. And I bought it 11 cents as well. And maybe, I can't remember if I bought anything higher than 11 cents, but yeah, that's the way I view it. I don't,
Yep. Same with me. This
I'm
is
not
one
sure-
of my smaller holdings. I'm not like hugely in this. I should have bought more, but okay, I'll show you this. And this is probably, you know, relevant for your gas chart as well, natural gas. I mean, we talked about kind of the Livermore's bullish cylinder, and we right now in natural gas, I feel like you're sitting here somewhere, right? Because you're testing like the resistance. If you remember the natural gas chart, we're sitting like right at the top of the channel. And here, like, I could have sold out going, oh, it's gonna go down, it's gonna go down, it's gonna go down, like, right? Because then your ultimate target could become here, or even here, right? Because this is probably the next level of support that I see. Let's say if I sold out here and panic because it's now back in the channel, like, I would have missed out on all this move right here. This is what I mean. Like, you can't trade this stuff. Like, I mean, anyone who pretends that they can trade in and out of this and beat the sit tight strategy, I don't know. I just don't think it's possible long run. I mean, it could be possible in the short term. You might get a few lucky trades here and there, but to me, the biggest lesson is I can't predict the short term movements. Like, that's what 2000s has taught me. I can't trade in and out of this successfully over time. And one day it's just going to break out. It's going to go. I'm going to miss out on a 20 to 100 bagger. Like, that's my biggest fear. That's my biggest fear. And you can, I don't know, if you think you're, I mean, anyone who's watching this and who feel like they can trade in and out better than sitting tight strategy, like, reach out to me on Twitter. Let's track it. I would be very interested to see if there is a trader that would be good enough in the commodities bull market to outperform the sit tight strategy to the end of this bull run.
I'd like to see that too.
I
Actually,
would like to see it. Like, genuinely would like to see it. Like, I mean, I'd very much like to see it, because I just don't think it's possible.
because all that's going to happen is they're going to get one thing that's wrong when that boom happens.
Yeah.
And or they convert into us. They start doing a buy and hold strategy.
Yeah.
Yep. So
Yep.
what they did is they got lucky on a pullback, bought it when, you know, at a good entry point, and then just held on.
And then
And
just
then it's like,
hold
well,
on.
that's what
Well,
we
that's same as our strategy, because
I
then
know.
we're looking for accumulation points anyway, right?
right.
Like,
So,
just now, like, I mean, we've been buying a bunch of stuff. I mean, you've been buying a lot more than I did. But, you know, like, entry into like LEU, for example, and you bought a bunch of stocks too. So,
yep.
Yeah, I mean, that's the same as us, because we're just holding and then just, you know, making further acquisitions when the opportunities are there. So
yeah, if an opportunity is in front of me and it's sitting there, I'm going to take it. That's all it's going to be. And if it's low, I'm not going to get scared. I'm like, hey, we're at support. It's coming back up and creating like a hammer pattern or a wick. I don't know. I just fire away. But I don't know. I can take a 20 or 30% hit even on that. Like, I don't know what it is. I might be disconnected from my money or something. Maybe I have a circuit in my head that's not connecting, where I have that fear and that doubt. I just, like, I'm not, it's like I'm a machine or a program that just looks at it and say, well, you know, if it pulls back further, that's okay. I'll buy it at this next level. And then, you know, you hit it, you go down 50%. I'm like, doesn't matter. I'm going to buy more. Boom, 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 boom. And then I start getting even more aggressive too, because I know the more I buy lower, that position's kind of gone up above. So I just kind of like load in, and I don't know. I guess it's a psychological thing.
I think it might have been the 2000s, Andy, that did this to both of us.
Yeah.
Because now, like, instead of fearing anything going down, now we are fearful of missing out on the biggest run, right?
It could be. I don't know.
Maybe,
Like,
because that's my biggest fear. My biggest fear is like missing out on the parabolic move.
well, you can't get back in. That's the problem.
You can't. You just can't.
Like, you
just
psychologically get damaged trying to get back in. Like,
I know.
I mean, if you see something at like 30 cents, can you buy it at $3 because you missed it? And that can happen in a month. You could be like, 1 month, bam, $3. You're like, that wasn't on my watch list. Damn it. Like, what do you do? Like, what do you do? And then you get confused and you don't know what to do.
Yeah, and you miss out. You miss out. And the thing is, the biggest difference between buying it at these low prices when it's not going parabolic and buying it when it's going parabolic is your risk to reward profile is so different. Like, right now, we're going for 50% downturn potentially compared to like 30x, 50x. Whereas
it's okay, you can barely hear.
Whereas if you're buying it like when it started going parabolic, you're now risking losing almost all your capital if it was to go down. And then your return potentially is only going to be like 2x, 3x. So it's a whole different risk reward profile.
Yeah, I agree. So,
Yeah.
I mean, yeah, I don't really have much more to say because I don't know, it's just ingrained in me. I already made the strategy. I already know what I'm going to do in this bull market. So that's what I'm going to stick to.
Me too.
So that's all I've got, Scott. If you have anything else that you'd like to share, or
just this?
Yep.
So this is Proverbs 4:23. Above all else, guard your heart, for everything you do flows from it. So yeah, just look after your heart and the way you think, and everything flows from it. So, you know, think positively. fill your heart with love. All that kind of stuff.
All right, so that's what we've got. I don't have anything else. Thanks for coming on, Scott. I really appreciate it. Definitely check out the channel, Sow and Reap Capital. He's part of that channel. So if you want to see it, go over there, watch some of his videos, see what kind of other analysis that he does. And I know it's also got some religious stuff on it as well.
So thank you for coming on, Scott. Appreciate it. And
Thanks, Andy.
we will see everyone next time.
All right. See you, everyone.